Hello everyone, I'm Trader Sumo, and I found a question from a Twitter follower that I thought was interesting, and I thought I would try to answer this question without just being a complete douche, even though I think this is the grossest looking chart with the highlighter colors, and it's making my eyes bleed, but that's fine. His question, or her question, I'm not sure if this is a guy or girl, the question is simply revolving around this circle being an inefficient area in the market and support and resistance. And the problem here is that the term inefficient is kind of nonsensical. It is thrown around by market technicians, uh, largely market profiles, kind of popularized in auction theory, and the ICT crowd has also kind of bastardized it. And I think it's both are somewhat silly when you start really thinking about it from a provable or logical perspective, because we're not making assumptions, what I'm going to show you. Whereas here, you're making an assumption as to why the market is inefficient or why it's doing what it's doing. So what we're going to do is we're going to pull up the chart, and we're just going to look at this real quick, and I'll try to run through this so that you can better understand what I'm talking about. So here the question was dealing with this area in the market with Bitcoin from the September 2021 lows. Now, the real question is that he's not asking is, why did the market do this? Why did it take off? Why was there an inefficient price discovery in that? What he's really saying is, why is it so strong? And we got to consider what happened. Okay, I can't teach you every single thing, so you're just going to have to bear with me. But what I want you to realize is that on the chart, you see these lines, and they're signifying that there are trend in these areas. Okay, the market is trending constantly. So we're just going to make this simple, and I'll just draw that in as simple as I can. But basically, let's just consider that these are the bigger trends in respect to the monthly chart. Let's just talk about this area for now. So these green lines are representative of the trend. It doesn't mean that price is going to follow them and use them as support and resistance. It's just a representation that these are the more important trends that are respective of the time that we're talking about. So in this inefficient, air quotes, area. Now, what you need to understand is that when we look at the chart, there is a significant level here. This is the start of this trend down. So if this is trend 1, this would be trend 2, trend 3, 4, and you can number this forever, right? But just for your reference, okay? So trend 1, or this move down, is creating a significant level, and it gets tested here for the first time, and we get liquidity off of that area, and we all know what happened. We crashed. We went down to sub 4,000s. I believe Binance and some of the other exchanges halted here for a brief time to try to save this, because what happens when you just think of it logically? If you're making an uptrend and you sell off, the idea is when you come back and test the area of significance here, or the peak or trough in this example. So this would be the peak of this uptrend, and we test it, or that start down, as I call it, the trend start. We sell off. If you're in a downtrend, you should continue making new lows. But what they do is the exchanges halt this essentially at the most significant or critical time. They halt this, and notice where this level comes from. It's coming from the trend start here that took you up, and it hits pretty much exactly, and the exchange is halted. If you remember, if you were trading, a lot of you probably weren't trading at that time, but I remember this specifically. A lot of the exchanges halted because there was no bid, and we were crashing ridiculous. It was kind of panic chaos. But the expectation was we're going to go below this low because we didn't make a new high. And if the logic of trend is You should continue making new lows if you're in a downtrend, or continue making new highs in an uptrend. Well, they saved the market. Okay, whatever. We held the start up. We saved the market. Well, then now your expectation is no longer in a downtrend because we're not actually continuing lower. We're not losing this. We're not making new lows. So then the expectation is, well, one, I've cleared the liquidity of the start down. And two, when price comes back up there, I should be able to continue through it because I've cleared the liquidity. Does that make sense? There's not nearly enough people here wanting to push the market down. So the dynamic, the logical progression of trend is we have to continue making new highs. If we're not going to be in a downtrend, then we have to be in an uptrend. There is no sideways trend. You're either in an uptrend or you're in a downtrend. It can only be one of the two. And if you're transitioning from one to the other, you will get this sideways type movement. However, you're always in one or the other. Okay. I mean, that's just how it is. Okay. Market doesn't just float. Okay. So now we have to consider, I know that was a long-winded explanation, but now we have to consider, well, what is happening here? Well, price doesn't need to stop here anymore, so it can continue higher, right? So what do we do? How do we figure out this area and why price is using these levels? How do we find levels? Well, we can't see any on the monthly. So what do we have to do? We have to go to the weekly. We have to rotate lower, and we have to start looking at the price action during that time. So what I want to do is I want to think about this all-time high and the areas that are important. So I'm going to mark the high, and then we know that price sold off, makes a new trend, little uptrend, continues lower as we were selling off back in 2018. Well, look what happens when I rotate the chart and we see where price is using these levels of support. All I did was rotate down. I used my old trend to give me these areas. And then to piggyback on the idea of inefficient, it's just not really a good term. It makes no sense to me because the market did what it was supposed to do. We know that when there are levels being formed in the market, that's where your trading happens. That's where the market has inflection points. That's where the pivots are. Okay. So when price comes up here for the first time, it does what you would expect. It sells off back down to the prior resistance. If we look left, so when price comes up here again, we're testing, comes right back down in this candle. So if you zoom in, this candle here, test your spot pretty much perfectly, which is coming from this level, right? And then well, I'm not changing trend here. So if I'm not changing trend and I'm going to hold this, I need to make a new high. And then ultimately, I need to make a new high above this trend because that's what trend does. I have a bigger scenario in play. So I need to make a new high to be in an uptrend, which is exactly what happens. So this idea of inefficiency makes no sense to me. It's not that it's inefficient. It's that the market already did what it was supposed to do. It already cleared the liquidity here so that we could rally. So that when we come back, now we're in a different trend. We're in a big downtrend now. So now people are wanting to buy and they're looking for areas of significance that will be important where we can create liquidity, which is what happens here all through our early 2022. And then we sell off and we revisit this. And then as the market, if we pretend that the market continues lower, we would just simply do the exact same thing. We would start looking inside of here, these levels, and find our significant levels. So that hopefully answers your question. I think I didn't truly understand the question, but I think that should help you understand efficiency and inefficiency and why it's really not a thing, at least in my perspective and how I approach the chart logically. Because you have to remember, when you say efficient and inefficient, you're not actually saying anything other than the market moved quickly. It moved quickly through an area. You're not explaining why it did that. You might chalk it up to it's doing that because some news event, which very well could be true. News will act as a catalyst. However, it doesn't explain it technically from a trading standpoint or more importantly, from a trend standpoint, using pure logic. Because what you're seeing on my chart, all of these orange lines that you see are coming from this algorithm, polytrends, that I myself and our team has developed. So everything here is algorithmic. It is finding a set of rules that it has coded, and it is following those rules in how it's signaling or plotting these areas. Okay, so that's what you need to take away from the idea of inefficient, and where levels of support and resistance really come from. I always say, if you don't understand trend, you will not understand levels of support and resistance. And what are levels of support and resistance? Areas where significant levels of volume, aka trading, are happening to offset the previous direction. So that's really what you need to think about. This area is offsetting the previous direction. It was down. This area was significant. There's lots of trading happening. If you were to plot volume on the chart, you would see a big spike in volume if you had volume profile, and it would be huge there. And you would see things like that, just letting you know that this is where really the more significant trading is happening. So take that with a grain of salt, and I hope that helps you understand. I'll see you guys.